Futures have a positive tone as we start the week at multi-year highs. We have the president giving the State of the Union Tuesday, and also Tim Cook gives the keynote at the Goldman Sachs conference. Pope Benedict to resign for health reasons, the first pope to step down before death since the 15th century. I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Rudd, the Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So S&P making new highs again on Friday. Scott, what's your game plan heading into this week?
I think that the game plan doesn't change that much. Every week we come in and we're like, okay, what could derail this rally? How do we continue? And anyone who's really just fighting it is very, very frustrated. You know, the way to go about this rally has been portfolio approach. It's been, go from sector to sector, play different chart patterns that look to explode, so you could use a tier system. But overall, until the trend significantly changes, don't fight it, stay with it. It's been the same approach we've had, pretty much every week since the rally, got back in vogue, come Thanksgiving week, which is, I do believe, where it started again.
So what are the key levels to know in the S&P right now?
Well, if we go to the chart of the spiders, we'll show how the trend has evolved or has transpired. And if you look here, we've had, this was that November 16th red dog reversal when the rally refreshed after, a correction from the September highs. From there, you had to move to this downtrend. Then this was New Year's Eve, where it got energy once again. But at this point, it still wasn't rally off. This was a market under pressure, and then it reignited. So if you did take off some stock here, this was your 4 or 5 days to get back involved. This was the beginning of the year where you had your gap up and digestion. And then we talked about stair stepping. Here's 5-6 days up, 4 or 5 days up. Then we took out the September highs, and then up here it got a little bit testy. Rightly so, after a huge move we've seen all the way from November. So if you wanted to take a little risk off, no big deal. And then, here we closed like actually right below the 8 day. I know I took off some risk here, but then, we gapped up, and there was some ways to get back into some quality names or some different names, and then we closed in our highs on Friday. So right now, here's your new pivot. We're opening up above this 151.89. I guess if we were to open up and go back below it, maybe you take a little bit off, but overall, here's your 8 day moving average. This has been a great barometer or vehicle to watch as we've been trading and closing around it. So until we get a really big break where we don't bounce back above it quickly, stick with the trend.
So with events coming up like State of the Union, like G7, G20, what's important to focus on?
I think the State of the Union is going to be a lot of the same. He's going to talk about fairness, and he's going to talk about the middle class and how he wants to make jobs and infrastructure. I'm hoping that he just realizes the difference between millionaires and billionaires. We're just a little bit different. Anyway, I think what traders are focusing on is really the G7 and G20 because, as you know, every market time period we obsess or we look at correlations. And this one, has been a very highly correlated market to the yen. You hear it being spoken about everywhere. The Nikkei had an explosive move, helped because of the devaluation of the yen. If you look at the chart of the FXY, you will see it's been a heck of a move, to the downside. Okay, so here you have a little bit of a reversal. So you want to see what happens there if this bounce continues, maybe to perhaps the 21 day, which we haven't seen since November. Okay, so you want to see if there's a trend change there. You go, a lot of guys were using the YCS as a vehicle, and look at the run this has had to the upside. So at this given point, we have a little bit of a pullback. We want to see if it's bigger, and then if it does get bigger, you want to see, what type of effect it has on our markets. I don't think we're so directly correlated. The last year and a half has been all about the euro. The last month or 2 months, it's been all about the yen.
Well, let's turn the spotlight to tech. We saw nice action in tech stocks last week. Helping to lead the way is Apple. Apple, of course, we got finally that much anticipated bounce. What do you expect from Apple this week?
I'd like to see a little bit of sideways action, some commitment in this upper area. I think a lot of traders were rewarded last week for the technical bounce. If you remember, we were talking about like 448, and then whether or not we can get in that gap around 462. If you look at the chart here, which has been in a major downtrend since the September high, since we hit 702. Remember, we lost a 21 day, we lost the 8 day, we lost a 50 day, and we continued all the way lower with some trades in the middle. So finally, early last week, you saw a potent day. Remember this day that took out the prior 2 days where I'm like, this puts it back on the map for a potential gap fill trade. And then here you go, this was your buy. You had a nice little add in here if you were at your desk when they came out and said that, they were going to try and give some cash back to shareholders. And then on Friday, a little bit of follow through. But every time we've gotten to the 21-day, we've had some pretty significant resistance. Here we gapped above it and then couldn't stay above it, and then here we were above it for 2 days and then went back below it. So I would say at this point, if you're trading it incrementally, I'd like to see it hold Friday's low, which comes in right around here of 468.25. Do a little sideways action, and then if he actually comes out and gives a plan to give back money to the shareholders, not exactly the Einhorn plan, but something similar to that, and they do a big buyback, which I think the street really wants because they're more worried about the equity price and support versus that in a potion. Maybe we break that descending trend line, that descending channel, which one more time, if you go to the chart, is right here. And you're going to have to close above it with power, and then I think some of the more intermediate guys are thinking that Apple could see, 551. So for me, I'm happy that I was able to be involved for this rally. I'm long a little bit today, and I'm going to keep taking it day by day. But if the commitment's there, I'm going to stay long and keep, going with it.
All right. Well, Netflix has been strong after earnings. Does it look ready for another move higher soon?
This one, it had that explosive move, very explosive, and people, I was like, don't chase it, but it also doesn't mean it's a short. And since earnings, it's been a really nice two-way vehicle, obviously more to the long side. If you take a look at the chart here, this was that first day with the gap up after earnings, and then you had another nice little pivot right when it crossed above this point, which was 149.17. So if you were shorted into this, you had a quick little decision to make the cover right there, and if you were looking for follow through, there it was. Then you had a little bit of a reversal, and then you had a choppy flag until it continued. So, at this point, a rest is somewhat due, I would say, for this same type of speed to stay pent up so it can continue higher. I say the 8-day catches up and, right around here. If it could hold this area, what's this low here? This is about 178. So 174 to 178 would be the bottom end. At some point, it probably goes again. So don't just blindly short this. If you look at the weekly chart, you will see, we're coming into some bigger resistance, which comes in right around 200. So, I don't think there's so much meat left on the bone to the upside, but again, it doesn't mean it's a short. Just look at your price action very close.
Well, Google climbed as high as 786 on Friday and wound up closing at highs, but then reports over the weekend that Eric Schmidt plans to sell a major portion of his stock. What do you make of Google?
Google's been one to own ever since earnings. We talked 2 years ago, high beta technology name to go with and of the year, which wound up doing well last year, but it continued this year. If you look at the chart here, you will see that this was the gap up after earnings, went a little sideways, had some power, stayed above 760, and this is the way I'm gonna look at it now too. I was like, as long as we stay above 760, we have a decent chance that we're going to take out the historic highs here. So now with news of him selling his stake, you want to look at different levels. The last little breakout level was 772 to 775. So if it could hold, 772 to 775, I think, it's taken in stride. You have the 8-day at 771. If it breaks that, then it could continue also down to the 21-day where you have 760. So I think some guys might be trapped a little long here because it did close well. So let's see in the first 30 minutes if it comes off the lows and there's an opportunity. If not, just give it a little bit of time. I don't think him selling a big portion of his stake is indicative of what's going on at Google. It's just that he wants to diversify, and it happens with every company in every different part of its cycle.
All right, so don't let that make you nervous.
Not too nervous.
Right. Amazon now, however, has been in a short-term downtrend for the past 2 weeks. Lost the support of its 8 and 21-day. So what's that key level it needs to break above to get back in action?
It's right now in one of those stages where you're feeling it out. On earnings, again, it wasn't a blockbuster quarter, and everyone was trying to make excuses on why it shouldn't go down. And finally, it couldn't take out resistance. Remember that 284 level? Couldn't take it out. It became a decent spot to short against. And if you look here at the chart, you'll see that was right around here. And since then, it kind of meandered lower besides this one green day. And I actually caught a decent short on this day. I remember 261 or the 50-day. But I guess you can't be short Amazon for too long. And then I said my trailing stop would be if it takes back the 50-day, which it did. If it would have closed in the dead lows, I probably would have stayed with it. Instead, I just took the trade for the day, and then on Friday, it tried to hang out a little bit. So I would say watch this lower level build. If it starts to break above 265 with volume and could hold above it for a little while, perhaps it comes back into the upper end of the range. But the longer it stays here, the more prone it is to some weakness. And the next time it gets below the 50-day, if it could actually close below it with some authority, then perhaps you get a move down to lower level support. So right now it's a little bit tricky. I don't see a clear-cut setup, so I'm just going to watch to see it develop.
Priceline, on the other hand, held its 21-day after a pullback at the end of last month and then regained its 8-day on Friday. So what are the key levels to note in Priceline?
This one is, for me, is always tricky. Sperling likes to trade this one because the movements are big. I kind of avoid it, but if I just look at the chart, you see here that it is in the game. It's above all its moving averages. It closed well on a Friday. It's above what has been, like, if you remember, this was really big resistance that it broke above with authority, then came back and retested. I would say short term, if it can get above that area. I know some guys will be looking for momentum, so this area of resistance right here is about 704.17, and then for it to get really into a squeeze mode, it's going to have to get above this 721. But overall, it's looking good. If you can handle the swings, Priceline is definitely around there for big movement. For me, it's a little bit tricky to trade.
Okay, well, coming up, we're going to go in the trenches with social media stocks. But first, quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
There's been a lot of action in social media stocks as of late, including LinkedIn, which extended to new all-time highs on Friday after earnings. Scott, you played this name with a call spread into earnings, so what's your strategy now?
I don't take stock usually into earnings, so I wasn't going to change the trend here, even though I thought it was really set up for an explosive move. Anytime you get a company that's been public for like 2 years that have had some earnings reports come out and they showed consistency, you have a big name like LinkedIn, it's in a growth sector, and it's also shorted with a pretty tight float, it always makes up for an explosive situation. So what I did is I did a call spread. We talked about it numerous times, probably too much. And my gains were actually a bit capped. It would have been more profitable just to do a straight up call buy or even taking the shares. But for me, my process is I was going to do a call spread because the premiums are really high. So anyway, you look at the chart here of LinkedIn and you will see, this was the major pattern that we were watching. The weekly pattern where it's been public for almost 2 years. Here was your last channel. Lots of little micro buys along the way, and then pow, big gap up. Right to 150, cleared this. So if you were a macro investor in LinkedIn, congratulations, you got rewarded. Now for me, I had I got my call spread, I had to take it off because, it was a weeklies that ended on Friday. So if you're not in LinkedIn, I'm in the same exact boat as you right now, guys. Here is what you have. This was Friday's action. For those of you who are looking just to short it, saying, oh my goodness, it can't continue, it's going to get crushed. You know what? Look what happened to Netflix the day after earnings. Boom. Above the high, it continued and went and had a huge gap. I'm not saying it's going to be the same thing as Netflix, but just I want you to think twice before you have short on the brain. So what I'm going to do is I'm just going to give it some time. If it were to trade above Friday's high, 151.89, perhaps you get a little day trade. If it goes above, squeezes, comes back below, maybe some guys will short versus that high. So I think it could be a two-way trade. I'm going to give it some time to develop. What the best thing would be is for it to go sideways within this huge candle and hold the majority of this gap. And then I do think we get another setup at a given point. But right now, I think it's just a two-way scalpy type of trade. And if you were in it for earnings and you were a macro investor, I think you just stay the course and trade around it a little bit because that was a nice move.
All right, Facebook has been getting some pressure from its key moving averages after the gap down on February 4th. So what's the level it needs to break above to get some momentum?
This one's been tricky, or trickier. This was one of my focuses in the beginning of the year. It was in my 2013 thesis that I could see 32 to 34 by the end of the year. It wound up seeing it before that event when they announced their search product. So it was a good time to take some off, plus earnings. You remember that? Everyone upgraded the heck out of it, and it wound up being a sell versus a buy. And now it's at a point where it's trying to build a new floor above 28. You look at the chart here, you will see, this is when I really got excited about it for it to potentially ignite through and fill this earnings gap, which it did. Then it took time to base and consolidate and absorb what was a really nice move from 20. Then it went again. Then here was, your bit of a double top, and now it's hovering on the 50-day. I am long some. I think you approach it two ways. If it were to break below this 2801 and you're uncommitted to it, you could sell it because you don't know where exactly it's going to go. I've come out and I still stand behind the fact that I think at some point this year it's going to take out this 3251, that this is not the high of the year, but if it depends on your time frame. It's now creating somewhat of a bearish flag. So if it doesn't get above this, just say 2929 soon, there could be some pressure by the technicals here for it to break below 28, and then you might see a move down to retest this breakout. So I'm in some. I'm not just building a position in it. I'm going to trade around it, but I also think that if you want something to accumulate or at least stay with tier one, you stay with this one, and at some point it takes this out. It's just a matter of when.
Okay, Zynga has been a beaten up name, but woke up recently. The stock was up 11% on Friday and cleared some key resistance levels. So could Zynga be one to put back on your radar?
It has been. We've been talking about this as a treasure. No, it's a treasures for trash trade, because if you've been holding it since the IPO, or since everyone said it was going to 20 when Facebook was coming out, when it broke every key technical level, it's probably in your trash bin. So this little bounce means nothing to you. If you're someone that wasn't involved and looking at this big lower level base like Mark Sperling, I have to give him credit because he's been all over this, trying to hold it for a while. I've been back and forth, but it gave you a nice entry after earnings. Okay, so finally earnings out of the way, gave it some momentum, besides, Governor Chris Christie coming out with his new gambling thesis. Anyway, you look at the chart here, this was from when it came public, okay, and you had a little bit of a nice trade right there. You remember that? I'm not going to take you too much through trip through memory lane. Here was your shooting star top before this crazy move to the downside, where you had some areas to get out right here, and then this was the low level base. So down here, unless the company was going out of business, it made sense to maybe try it a few times. I know we tried it here, right here actually, I think, lost a little bit as it failed. Here, it failed, and then finally got above this level we were talking about, this 275 or 280-ish, and stayed above. So this is when it went back in my VTF, and look at it, closed at 343. It's in this gap. You still have more room in this gap until 440. So I think you stay with some. Kind of forget you own it. If you want to trade around it, if it were to hover a little bit right here and then trade above Friday's high of 355, you could get some more momentum, but this has been a nice move. It probably needs to digest, and it was a great little bottom feeder type of trade.
Groupon is another one that has been a beaten up name, but has made a methodical move to the upside, is now reaching a pivotal resistance level, about 550. Do you think it can break through it?
I think if we still see money flowing to social, which we have been, people want to move, to be explosive. This inching up in Groupon has been fine if you've been holding it. It's been one of your positions if you're in a portfolio approach, but it didn't have like that Zynga move, or it didn't have one of those stretchy type moves or nice intraday trades. You look at the chart here, this is that level. I'm not in this, but I'm going to put it on my radar. It has to really get above, I would say now 575-ish with authority for it to then try and fill this gap that comes all the way into about 7.25, and then here's a 200-day. This is when it somewhat woke up on this wide range bar, and it's just been really, really choppy. Beating down names like this, you want a few days like this in order to make money, not be in this choppy mess. So I'm not in it. If it were to start showing really nice volume, maybe I would cheat if it gets above 570-ish, for it to break above this 576 for just a trade.
And then there's YELP, which reclaimed all key moving averages recently. What are the levels to watch in YELP?
YELP, we traded a few months back, and then since then it's been choppy, and the report that came out was perceived a little weak, but the street kind of ignored it. So I think that's positive, as this chart seems to need more time. You look here overall, it's been a very choppy stock to trade. But if you look here, it's only been public now for, almost a year. So with that said, with more time, I think that you'll get more institutions to be involved. I think the business model still is unproven. So at this point, I'm not recommending it as a macro hold. But if it does start to get above this area again and tries to really claim and get above, just say 23-ish, it could head back to the upper end of the range. But at this point, it's a little riskier in my opinion.
All right, time for some quick hits here. Let's talk Bank of America, which has been holding higher levels of support. How constructive does Bank of America look to you right now?
A lot of people were saying on Friday, oh my goodness, why is Bank of America weak? Why isn't it going? But meanwhile, it's just had a big run. And this money just keeps going back and forth. And last week, it seemed as if more money was focused on tech. If you look here at the chart, there's been many places to be involved. This 995 was one. Here was your flag. Then it continued. I think some guys got stopped out right around here like me. I got back involved in this area. Now, it's holding higher, but it lacks momentum. So at this point, it could come in, and it could continue in this channel here and just not be ready to break out. The breakout will start to occur if you can get back above 12, 12.20. So if you're in it for a breakout, don't have breakout shares yet because it hasn't done it. Just have digestion shares here. So I'm in some, and I'll wait to see and give it more time to see if it could break out. Same way with Citigroup, it's holding up here. If you're in tier 2, tier 3, tier 4 for a breakout and it hasn't happened yet, you better be careful. If you're in tier 1, let it work out until it does something different. That's fine because at this point, again, it's had a huge move and it hasn't given you that breakout trade, and it might even want to come in if the market corrects. So at this point, be in small and wait to see if there's more movement to the upside or if it needs to base longer.
And MGM gained more than 4% on Friday. Is more upside in store here?
This one, it just gives you, it's a good example of how a stock could drive you a little nutty if you try and be early. MGM, is a stock that I tend to go to every now and then at different parts of the year. We talked about it when it was 10.75. It had a big move, and then for a while it's been just holding between like 12.70 and 13.15. And every time that I've been in for a tier 1 and added too many shares for the breakout and it failed, I would just sell it and get a little frustrated and be like, oh, I'm done with this one. But meanwhile, it just took time. If you go to the chart here, finally, I remember this day I had so much size and it came in and failed, and I think I got out of most of it on this day. And then it started looking better again. So I didn't say, Red Dog, you can't play this because it got me here. I got back involved, had small on this day, and then finally above 13.15 I added a decent amount, and then you had that clean breakout move that a lot of us were looking for. And now if you look at the macro chart, you will see clean move to the upside. I would say there's no reason why this thing can't get to 14 and at some time this year get to as high as 16. So here was a really nice break above resistance. Then it held and just digested, and I think that you stay with this one. But right now the add a momentum tier size in, for a breakout move happened on Friday. Now you just trimmed it and you trail it and stay with.
All right, VMware looking as though it's trying to fill the big bearish gap. What do you make of its action?
This is going to be interesting because I know Barron's had a negative piece on it this weekend, and then I'm not sure who upgraded it this morning, and you have this really tight 5-day pattern. You look at the chart here. This will be on my focus today, and I don't know which way exactly it's going to break, but look at the size of the hole in this chart. Look where the highs were here. And look where it is. It's at major support. So you can have a lot of forces fighting here on BMW because the bulls want to hold this thing right here. And the bears, if they break it below, it has significant downside in front of it. So for me, I'm not a bull or a bear, and I'm a trader, so I'm going to look at the price action. So if it could start to get above this 80 and hold above it, I'll get long for what could be a decent gap fill. If it starts to fail here and trades below and closes below 76 and a quarter, some guys will jump on the short side. So right now, watch this tight range and see which way the trade develops.
And 3D printing stocks have been in vogue. 3D Systems has been on a lot of traders' radars. It seems to be stalling right now in front of recent resistance. So do you think it'll have enough fuel to break through it?
Maybe a few sessions, but at some point this week it could. This has been an unbelievable sector. I know Mark's been focusing on it the past 6 months, and it's been on a run for 2 years. This group has been one of the innovative groups, and in the market you find new leadership. And Triple D and SSYS, amongst a few others, have been leading the way, rewarding investors who are early. And now traders are involved, and it's been, trading tactically. If you look at the chart right now with Triple D, you will see, it did provide some cash flow for guys who got short right here when it broke down. Look at that wide range bar. And then if you remember, we were trying to nibble here in the 50-day, and then nice move here. It's doing a 3-for-2 stock split. So now I would say with a little bit more time, if you want to be long, it'd be long against, just say this 62 area, and then at some point it breaks this descending trend line, just like it's done so many times over the course of this trend of the past 2 years, and then it continues. But overall, congrats if you found this group early. I was a little late to the party. I think I started to nickel and dime it somewhere in here. And it does seem like it could go again. And the same thing, watch it, the other guy too, SSYS, which isn't acting as well, but they also didn't announce a split.
And just quickly, gold looked like it wanted to break to the upside last week. It didn't. Will we see it go to the downside now?
Well, let's see it get confirmed. I know last week or the past few weeks, every time it's looked like it's going to break above the descending channel, I've gotten long, and every time I've gotten long, and if I added to it, it was a losing trade because I was trying to be in early. I wasn't waiting for confirmation. And now if you go to the chart of GLD, you'll see really, really tight pattern coming in here. I know on this day, which was, I think it was Thursday, got hurt a little bit trying to add to the position, but I'm out of it now. And now if you look right, it's below this 61, I think it's like 60.50. So if it were to stay below, I'd say, say 60-ish, okay? With authority, perhaps it'll trigger a move to get resolved to the downside, and then you have really big support around 158.30. If you look all the way back to here, that was a big gap. So, if you're a gold bull or a bug and you have a thesis, you might be in for some downside pressure. If it opens down $1 today and reverses, I think the bears will be just as frustrated as the bulls. So this way, I'm just going to give it some space and let's see what really transpires there.
Well, you mentioned today you'll be focusing on VMware. What else would you be focusing on as you head into trading today?
Well, I'm still in portfolio approach. I'm still trading around positions. I know last week when we broke below the 8-day, I probably pared it down as much risk as I have since the rally started. But then it gave you, the next day gave you some nice quality entries. That's when Apple got back on my radar and gave us a clean trade. I'm still long some of that. I'm going to see if I could stay with it and find a nice juicy pivot to trade through, which we don't have right now because that was last week. The financials still taking turns, and overall the market is still stair-stepping higher. So I'm going to see if that continues, and I think it should. I'm going to probably do it with a little less size, and I'll let you see setups, rotating around, because people talk about the great rotation, from potentially bonds to stocks. What about the great rotation we've seen from sector to sector? And every time money rotates from one sector to another, the sector that rests gives you some nice tight setups. So this way you can go back to it after it consolidates. And that's been the trend, so far for much of 2013.
All right. With that said, happy trading, everyone. Have a great Monday.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.